Good morning. We're going to be taking a look at Euro Sterling. We're going to be taking a look, to be frank, of all the Sterling crosses and the Euro crosses mainly this week. And the reason for doing that is because of all the hype that's going on. You know, let's have a look and see where we really stand on this. So you can see that the high that we posted this year, okay, is coming in up there. And you can see that that's coming in at 93.06. So everybody was calling it to parity. It didn't get there. We have not reached the giddy heights of 2008 yet. We haven't, where we just stayed below the parity level. So looking at the chart, I mean, this is on a weekly basis. It's doing nothing. It's going sideways. That's what it's doing. You know, now it could be waiting, as it has been doing for the last 6 months, to make its move. So where is it going to make its move to? It's really hard to judge on this one if you look at it on the weekly view, because although it's a safe way of trading the outright, so say you think Euro's going down quicker than Sterling, you'll be selling Euro Sterling. If you thought Euro was going to go through the roof, Sterling wasn't, you'd be buying Euro Sterling. So in effect, you do have two positions. You have one against the dollar, and then you have one against itself. So you've got Sterling, US dollar, you've got Euro dollar, and together they make Euro Sterling. So it's a safe-ish way of trading these two outrights, depending on what your view is. Looking at that weekly chart, very difficult to have a view. We've got the weekly pivot coming in at 88.70. We're trading around 88.50 at the moment. So again, there's not been this flurry, if you like, of the market going out of line or being a bit wacky. It is just grinded this last 6 months. So let's take a look now at the daily view. Now, the daily view looks slightly different, but look where it stopped. It stopped on that rally from its lows at the 61.8 fib, okay? And it double topped there. You've got that top here, and that's coming in at these higher levels, 89.39, and you've got the fib at 89.29, and you've got the last high at 89.32. So all in all, you know, the market did stop at a good level. We are above all of the moving averages, I have to say. The one that is kissing it now is the 9-day, and that's coming in at 88.51, which is exactly where we're trading now. So, you know, you've got to keep your eyes on these weekly pivots, daily pivots, Fibonacci levels, moving averages. As you know, I use moving averages purely as support and or resistance level. You've got, therefore, you've got the 55-day moving average coming in at 88.36. You've got the 200-day at 88.31. You've got the 38.2 at 88.24. So honestly, you can see that we are really well supported, and it really is, if we lost 8,800, that I think the market would have a bit of a hiccup. But at the moment, the Euro Sterling is looking okay. Now, that doesn't help us that get money in sterling and live abroad, but what it does do is show that I don't think that overall the euro can maintain above this. Morning, Chris. Well, I don't think the euro sterling can maintain these gains. I think it's going to have a real difficulty breaking through that weekly pivot and that 50% line, and I can see it coming lower, okay? So just bear that in mind, and do take a look at these sterling crosses, because they really are going to be important So you're looking at the euro crosses and the sterling crosses, and I think that will see us not only to the end of this year, but we're definitely going to have it more and more next year. Okay, good luck. I'll catch you this morning.